Hey, it's TaxQuips time from TaxMama.com. Today, TaxMama hears from Nunya in the TaxQuips Forum, who was advised by an EA that typically she prefers accrual, but I can't really recall for sure or why. She was giving a small business seminar at the time. Well, Nunya, ever since I read your note, I've been thinking about why anyone would prefer using accrual-based accounting as a general rule. And then, of course, it became obvious to me. She's talking about using accrual for book purposes. When you set up your accounting system on an accrual basis, that means you enter all your accounts payable into the system as well as all your own billing. This can help you do budgeting, schedule payments, and better manage cash flow and debt. And that makes perfect sense and is excellent advice. However, for tax purposes, you are allowed to file your tax return on a cash basis. Yes, you may use a different accounting method for books and taxes. That's why corporate and partnership tax returns have an area on the balance sheet page called Schedule M1 to reconcile the books to the tax return. Typically, it's on page 4 or 5 of the return. For most businesses, especially service businesses, filing on a cash basis gives you the best tax advantages. Usually, service businesses have a higher accounts receivable, which is money due to you, than accounts payable, which is money you owe at the end of the year. In fact, manufacturing, wholesaling, and government contracting are in a similar position. I was just speaking to someone this weekend who outlined his manufacturing cash flow. He must pay his suppliers and producers before they ship to him, or within 45 days. However, he doesn't get paid by his department stores for at least 60 to 90 days after delivering the goods. So, who wants to pay taxes on money you haven't received at the end of the year? And remember, you can find answers to all kinds of questions about tax versus books, accounting methods, and other tax issues free. Where? Where else? At TaxMama.com.